Top three things is what we start with on the macro show, then I'll get into some detail. So it's, guys, let's just go to that. Number one is going to be the yield curve this morning. Number two is going to be stock market crashes, which are either in motion or already happening. And in this case, that's a great opportunity for you to capitalize on with the futures higher. And then finally, hit on gold, which is a big buying opportunity here. Yield curve. Okay, this is what Powell did to the yield curve. All right, Powell took the yield curve to the lowest level. So again, for those of you that don't stare at the yield curve, you should. So again, that is taking the 10-year yield minus the 2-year yield. It has gone down 12 basis points already this week. That's a lot, okay? And again, if the Fed wants to raise rates 3, 4, 5 times, I think that they're going to make that dead flat to inverted. So in other words, the Fed would be, again, not only a catalyst for a stock market crash, but would be a catalyst for a very slow U.S. economy that is threatening on going on a recession. So again, you look at today's GDP number, a lot of people are like, actually, I even heard one guy say, it would be on CNBC, of course, absolutely no one was calling for this kind of acceleration in GDP in the fourth quarter. Well, that's total bullshit. I mean, on September the 23rd, we made the call when the Atlanta Fed went to 0% GDP growth that GDP was going to rip to the upside. And that's absolutely what happened. So again, now, that's the point. GDP is going to, from the high point towards 2% and maybe lower, the longer oil stays higher. Don't forget, on a real basis, GDP is reported, so you subtract sticky and high inflation. That's a point we're going to get questions on. You can have quad 3 factors with a quad 4 market. Got it? Quad 3 is when you have some stagflation, and in other words, inflation won't go down yet while it's peaking, and then you get quad 4 market. Quad 4 market is looking ahead to what? The quad we're going to be in. So again, quad 4 in Q2 is deepening as oil stays higher. Got that? Write it down. All right, that's point number one this morning. And yes, a wonderful buying opportunity, as you know. For if you're not watching this for free, you know that I was waiting and watching on buying things like 2-year notes, treasuries, again across the curve, not just twos, gold. Waiting for this Fed mistake, and we're certainly getting a wonderful buying opportunity on that today. Now, don't buy things that are crashing. Okay, we got Wild Bill Ackman, who always blows up in quad 4, talking about going big time on Netflix. Again, if it's crashing, if it A says bearish trend on your pin sheet, and B has a lower low in the range, and C is already crashing, don't be that guy, okay? Now, if you can hold it forever, whatever, but this is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. We're not day traders. We're risk managing our asset allocations and longer-term positioning around the immediate term. What else? Why else are you watching anything in the immediate term if that's not what you're doing? So again, crashes. We saw it again in South Korea last night, down 3.5%. If you look at South Korea, obviously that's in quad 4 back-to-back. If you go to, guys, show them slide 20, some free content for you there. If you go down the line, you can see back-to-back quad 4s in Q1 and Q2 are in Russia. Its stock market has crashed. Again, down more than 20%. And South Korea is now down 21% from where its cycle peaked. The Russell 2000 in short order will be down 20% or more from its cycle peak. I think the NASDAQ's going to crash too. It won't take long. So again, when you look at the futures, don't have an emotional reaction to that. It's not about the color coding or the cheering. It's about understanding where the puck's going next. We'll get into that with my boy, The Mess, and how he played pretty well. Congrats. Point number 3 this morning, gold. Buy it. Just buy it. I don't know what else to tell you. If you don't want to learn about quads or it's confusing or quad 3 to quad, buy it. Got it? Buy it now. Buy gold now. Why now? Because that's the low end of the range, right? So for all of you on the show that are subscribers are whining and complaining, well, it won't go down. I don't get to buy it. Now you buy it, right? You don't always get the low end of the range, but when you do, you buy it, okay? So again, that's what we're looking for here. Top end of the range. We'll see if the 10-year yield starts to come down, but we're certainly at the top end of the range on twos here, and that's why gold is getting upset for a day and a half. That shouldn't upset you. Buying opportunity. And for those of you that remember, at this time last year, I was saying sell it. Every time I told you to sell gold last year on the short side, it worked. We'll see how we do on the long side, and those are your top 3 things. The mess. Love the mess. So, Jonesy, this is a late birthday gift for you, by the way.
Actually, my mom got it for me for Christmas.
Oh, really?
So I'll take 2, though.
No, I'll give it to somebody else. It's a great book. Leadership matters at Hedgeye. So, again, being trend.
All right, everybody, good morning. So that's a little taste of what Hedgeye is all about. That's Keith McCulloch that was speaking. If you're out there and you are managing your own portfolio and trading like I do, I highly recommend Hedgeye and Keith McCulloch. He will keep you on track and keep you in, keep you profitable. He's a very talented individual. Okay, so for the trades today, if you were listening while I was doing and watching while I was doing the risk range plays, you can see here he was emphasizing that right now is a good time to buy gold because it has come to the bottom end of its risk range, and so there's an anticipated bounce there, and that's where you want to buy. Buy low and sell high. And here's the low end of the range. So okay. Everything else, yeah, it's there are a lot of things that are in the middle of its range. In fact, actually, here's a little gap that's been filled here. And there's another gap down here in the low 4,000s. I imagine, this is starting to look rather bear flaggish. This is starting to look like a bear flag. When it resolves to the downside, I imagine that there's probably going to be a test of that gap right there at the 4,000 even level. How long that takes to play out, how that occurs, it's anybody's guess. There is the possibility of, the price crashing to that level. There's an old saying that stocks take the stairs up and the elevator down. So, typically when something is going to move down to a price, it does move quickly. So, the amount of time that it takes to consolidate to that zone, it could be, September, 20 September to 14 October, so almost a month. It could take a month for it to consolidate and then move down to that target. So and it could take longer. It just really depends. Okay, so let's see. Next up, and so here are my daily picks here, and I don't really, when things get bearish, I usually don't pay too much attention to this strategy, and I usually don't use the strategy very much. And actually, when things are bearish, I actually really prefer to trade small caps. But small caps have just been polluted. The small cap momentum trade has been absolutely polluted with, I don't know who on Wall Street, I don't know who, in the game, but they're just ruining the small cap momentum trade. And so there's really nothing comes to fruition there. All right, so here's this stock, NOW, reported earnings today, reported pretty solid beat. This is an enormous company. Let's see, they're doing revenues, they're doing $4.5 billion in revenues. Earnings are, profit margin, it's a pretty weak profit margin. It's catching a bounce today. I don't really think that I'm interested. This is one of the leading large cap gappers this morning. The price of the stock, if it opened up right now, it would open up at $553.75. And here's the catch. So the price to earnings ratio is 454. I don't know anything else about the stock other than what I'm reading on right now. So I'm probably going to stay away from this. I put Fibonacci on this thing today, and it's when things are bearish, when the broader market is looking like it's getting ready to, crash after a consolidation, it's really hard to get bullish, some of these things. Let's see, pre-market here, NOW has traded 87,000 shares. So, that's not a heck of a lot of volume on, I think it's a 200 million share, 199 million shares outstanding. So, in the broader perspective, 90,000 shares traded isn't a heck of a lot in comparison to the shares that are outstanding. I wonder what institutional ownership is. Let's see. Where do I get more? Quarterly. I always forget where to go to get more information on these things. It's in here somewhere. But anyway, all right. Well, so, okay, NOW might give a trade, might not. And actually, you know what? I'll move, let me stay on top of moving the Fibonacci here. And so the strategy is an open, a dip below the open, and then a break back through the top of the open again is a trade. Dip below the 75 level, and a pushback above the 75 level is a trade, and then averaging in between 61.8 and 50. And on this one, though, I would actually rather just see it dip below and then the break back through the 61.8 Fibonacci, or a breakdown below the 50 and a break back through, instead of trying to average in between the 61.8 and the trying to average in between the 61.8 level and the 50% level. I think I'd rather see it dip below and break back through for a trade on all the setups. I don't think I'm going to try and average into a 61.8 to 50 level today. All right, so then the next up is STX. So this thing, finally, the pre-market started to show up here. Let me look at my Street Smart Edge here. STX 106.29 is the last. It has 106 even. Okay, so, and actually I drew my Fibonacci backwards here. So let's go there. So yeah, here it is, 106 even, same strategy. Break an open and the break below the open and push back above is a trade. Same thing with 75% level. And I'll probably do the same thing with the 61.8 and the 50 levels too. So a breakdown below and a push back above again. That's where the buy will be. So if it breaks down and then comes back up through, this is where right here is where my entry will be for the push down and the push back, or the drop down and the push back above this level, where if that's the open. And same thing with the 75, the 61.8, or the 50. So if it drops down below and pushes back up above, that's where I make my buy. And I'm looking just for a 1% move, a real quick scalp, especially in this environment right now. I think that we are in bearish territory on the broader market, so just really fast profit taking. And then YNDX here is also another candidate for the strategy. So I'm just going to see what happens. I'm going to have these three now. NOW, STX, and YNDX are going to be in my trading platform for the stock, and then I also have options windows set up for Tesla, Amazon, the Qs, and the SPY. And I'm keeping an eye on EEM. I'd like to see EEM, the emerging markets, find a bottom here. It looks like it's trying to find a bottom here, and might start averaging into some long-term emerging market plays here. Right now, it's being plagued, emerging markets to the upside are being plagued with a stronger dollar. So here are the risk ranges on the dollar: 96.81 at the top end and 94.68 at the bottom end. The emerging markets, they like weaker dollars and they like lower rates. So I think that right now might be an okay time to start averaging into emerging markets. Because usually what will happen here is you just get the random motion. A breakout right here could lead to higher dollar movement, definitely, and moving into quad 4 is definitely stronger for the dollar. So I don't know. If I start averaging into the emerging markets, I will start averaging in very slowly, and probably look for emerging markets to become much more bullish by the second half of the year. So yeah, it'll be a really slow move. Okay, everybody. That is my morning strategy session. Good luck out there. Keep your wrists tight. Click like, share, subscribe, and I will see you tomorrow morning. I am out.